Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand all the latest cues from the D-Street, from the benchmark index moves to sectoral action and all the stocks that you should be focusing on in trade today. Of course, we will be taking expert views as to how should you be trading in the markets, investing in the markets in the current setup, and also what should your strategy be on Reliance Industries post the earnings as well. Let's first look at how the markets are trading and then we'll introduce our guest to you. First up, the benchmarks still down in trade, second day in a row, 0.25% down for the Sensex, 150 points down, 66,530 the current level. The Nifty did slip also below the 19,700 mark intraday. We're seeing slight uptick from the lowest point of the day, 0.2% lower in trade even now. Let's look at the broader markets as well to see what's the momentum right there. So on the mid cap and the small cap 100 index, we did see the small caps really taking the lead in the first half of trading session, and that's what you can see even now. They have come off the lowest point, so 0.5% gains coming in on the Nifty small cap 100 index. The mid cap 100 index, however, is trading flat with a positive bias at 0.1% higher in trade. Among the sectors as well, if you see, it's the FMCG and the metal indices that are the top losers in trade today, but PSU banks, realty, IT and auto, these are the sectors that are showing some kind of a momentum on the street right now. But let's welcome our guest on the show. Mr. Devin Choksi joins in, MD at KR Choksi. Mr. Choksi, good afternoon and thank you so much for taking the time out for this discussion. Well, first up, I wanted to understand from you on the overall market setup. What is your sense? Is the market really running ahead of fundamentals and thereby you're seeing this kind of a consolidation taking place? And is there or there are some concerns on the valuation front as well? What is your overall outlook?
Yeah, good afternoon, Sakshi. Well, I think the more important part should be that if the market is having the right kind of a investment opportunity, then at every stage, I think it has to have some kind of profit booking also. Currently, what we are experiencing is the profit booking in some of the heavyweight counters, be it in IT, be it heavyweight like Reliance, where probably I think some amount of profit booking is happening. In my viewpoint, I think nothing wrong with the fundamentals of the companies, but this profit booking is basically giving a good amount of support to the market from being carried away in a bullish situation like this. So this profit booking should be seen as an opportunity in select counters where you are basically getting prices at a lower levels to buy into the portfolio. I would consider that other fundamentals remain extremely strong and convincing for the India economy and for India corporate sector. Such kind of small corrections, even time corrections included, are more meaningful for the market's journey for going ahead because I think that gives you the opportunity to buy stocks at a relatively lower levels.
Okay, so what would you suggest all the investors to do at this point in time? What is the best way to approach their investments? Since markets are trading near all-time high levels, what is the best way to maximize our profits?
Those companies which are expensive at this point of time and which a lay investor may not be able to figure it out. So I think they may have to go to the financial advisor, I think, who can basically help him understand. Uh, those companies which are expensive, I think, may probably be looked into from the point of view of the profit booking to a certain extent. If I may say that I think you don't book 100% of your profit, but at least I think some part of your portfolio can be encashed into profit so that on a given day when you get an opportunity to lower levels, I think you buy it into the portfolio again, those companies. That is an approach. That means I think today in a rising market, your eye should be on profit booking. Even if you have to regret after booking some profit because the market price ran up after you sold the shares, I think you still are better off because you're sitting with some amount of cash, which is fundamentally very important. So that is an approach that one should do. But as I said before, that if you are not competent enough in understanding this situation, your financial advisor can possibly help you better in doing the allocation of money after profit booking and then reinvesting thereafter after the once the opportunity is available to you in subsequent period.
So in the current market setup, are there any sectors that according to you are overvalued, undervalued? Where would you be more bullish on in the second half of the calendar year now?
So I think overall market remains absolutely healthy. That is not an issue. However, few stocks within every sector may have got disproportionately
Sure.
higher, I think, and their valuation may be disproportionately higher. And there are chances that I think some of the mid caps and small cap companies who are actually running up on stories, they have probably gone out of probably I think the limited window of valuation being remaining attractive, which means they may have become I think slightly more expensive. Mid caps and the small caps, they are typically vulnerable to this kind of market momentum where they become expensive, I think, much earlier compared to their actual result coming out. Whereas I think Nifty 50 companies generally they are priced to perfection. Normally, because in Nifty 50 companies, the investors who are coming in, they are actually, I think, operating with a matured mindset. And that is where I think they probably work with price to perfection. It
Yeah.
is only the small and mid cap companies where I think this price to perfection theory does not get applied. That is a time when probably I think you require to take the help of financial advisor and book some profit in some of those companies which are relatively more expensive.
Okay, let's shift our focus to Reliance Industries now. It posted the earnings on Friday evening after the market hours. We've seen a reaction today on the downside on RIL. The shares have slipped about 2.5% or so. What is it that the street did not like in the numbers as per you?
So I think the more important part about the numbers, the consumer facing businesses remain absolutely very convincing. The retail business segment has grown at around 19% rate of growth. The Jio digital platform, which is your mobile platform included, I think this is also growing at a reasonably good speed. And frankly, both these consumer facing businesses are today they are equal to, I think, the total EBITDA of the company, which is coming from the oil to chemical business. In last quarter, if you study, I think oil to chemical business contributed 60% of the total EBITDA. This quarter, we are finding that consumer-facing businesses like retail and the Geo platform, they are contributing 50% to EBITDA from 40% of last quarter. So, which means that consumer-facing businesses are doing exceedingly well. The oil to chemical business, oil and gas exploration business has done really well. The refining business and petrochemical business have probably slipped, I think, to a certain extent, largely because of the fact that I think the crude oil prices movements have changed, which is
Okay,
a temporary phenomena. In my
okay.
viewpoint, I think subsequent quarter it will get recovered. So Reliance per se as a company, they remains absolutely convincing from the investment point of view. And this correction in the price after the demerger of Geo Financial Services is a really good correction in the price, I think, which one can possibly look out for building the portfolio for getting rewards in subsequent period of time.
So, should one buy the dip after the earnings?
That's the approach. Yes, absolutely. I think that is what I alluded by saying earlier. That if you book profit early, in when the market is rising, then the opportunity comes to you when the market is falling to buy this kind of a story into the portfolio because the fundamentals of the company remains absolutely convincing. Like I think today out of whatever 2500 base price, if you see in 2500 base price, I think around 1200 rupee worth of valuation goes to Reliance Retail and
Yeah.
about 600 rupee worth of valuation goes to Jio platform. So approximately 1800 rupee worth of price out of 2500 rupee price of Reliance today belongs to the retail and the Jio platform. And balance 700 rupee worth of price, I think, would go into all other area of activity, including the treasury income that the company is earning. So to that makes, I think, the company relatively more attractive now because oil
Okay.
to chemical business, which is contributing significantly large amount of profit, cannot remain at the current price of 700 rupees if I have to use some of the part valuation, which I explained. It has to possibly, I think, go up eventually. So that is where probably investor will make money if they buy at a lower levels.
Okay. Would you also be raising your EPS estimates post the numbers now, sir?
It's still time, according to me. I think the retail business and the geo platform business, they are growing steadily at 20% rate of growth. So every 3.5, 4 years time, I think they are promising to get double from the current levels, which is fundamentally very, very important point of view. And I think the oil to chemical business, which has possibly shown, I think, the traction at this point of time in form of possibility of, I think, growing higher growth. In my viewpoint, I think one could possibly buy with conviction that yes, I think this is a business which will produce larger cash and at the same time higher amount of growth. So I would think that yes, I think the more than EPS, I think it is more important to see the direction call at this point of time in Reliance.
Okay. On Jio, I wanted to ask you, of course, we've seen great earnings, set of earnings, double-digit growth on revenue, EBITDA as well, the ARPU coming in again at 180.5. But could the margins be under pressure according to you, sir? Because the company has become aggressive on pricing. There is a new launch that the company has done on the smartphone as well. That could boost volumes, but could it have an impact on the margins?
Well, I don't think so because this company has got, I think, one unique characteristic now. Already, they have got 45 crore mobile customers into the portfolio, and they also have the enterprise customers and the household customers in their portfolio for the purpose of, I think, the solutions that they are providing on the household and the enterprise part of the activity.
Hmm.
Now, this Jio Bharat, which is your feature phone related expansion that they're talking about in 4G area, is replacing the 2G phones and adding new customer. In my viewpoint, I think suppose if this new customer count has to be added, and I think for the paucity of the time, I'll explain in one line that if 25,000 crore worth of revenue book is targeted by Geo platform
Okay.
from this new launch, they would probably make sure that I think they will make around 10 to 12,000 crore worth of EBIT out of it. So which would add to the 48,000 crore worth of EBIT of current Geo subscriber in the business, and that would ultimately on a yearly basis make a company of around 60,000 crore EBITDA, which is
Hmm.
about 5,000 crore rupee per month, which
Okay.
makes, I think, this is a compelling proposition for investors. So yes, I think I do agree on one part that they are adding new customers, but they are not adding these new customers at a cost of margin. In my viewpoint, I think the margin will still be maintained because your hard infrastructure is already on the ground. While
Okay.
you have already got the 4G infrastructure on the ground in all 24 circles, your 5G infrastructure is being created for the existing users. 4G infrastructure can be actually leveraged to the new users which they are talking of adding into the portfolio. So the cost is already built in, and according to me, I think with the new customer coming, it's a marginal costing approach through which I think they would get margins protected. So in my
Okay.
viewpoint, I think they should be generating sustainable margin going forward as well.
Okay. One last question, sir, and that is what would be the key positive triggers that could aid further momentum for the company? And now that the geofinancial adjustment is already out of the way, could there be a re-rating of stocks sort also on the stock?
So demerger of the businesses like geo platforms, the digital business, and the retail, they could be the next triggers as far as I think the immediate and the near term outlook is concerned. Maybe renewables is still in the building stage, so they may still take time, couple of years before which I think they may get demerged. Eventually, it will get demerged, but they may still take time. So at least I think in next 12, 18 months time, I think one could argue for seeing the benefits coming out of the demerger of Geo platform and Reliance Retail.
Okay, understood that. Well, many thanks, Mr. Choksi, for being with us on the show and discussing all these insights on markets and on Reliance as well. Always a pleasure having you with us on Business Today TV. Let's get back to the markets now to see how it's the momentum looking on the benchmarks. It's flattened out absolutely with the negative bias. 19,734 currently for the Nifty, just down about 10 odd points. The Sensex is trading at 66,626, down about 60 odd levels as well. So you're looking like some profits being taken off the table, but at the same time, there is constant effort from the bulls to return to shape as well. Let's look at how the second half of trading action really pans out.